Greetings, everybody. Welcome to Liberty Call. Today is Tuesday, June 6, 2023. Hope everybody's having a fantastic day out there in the interwebs. It's a beautiful day here in Colorado. The sun's out. There's a few clouds, but a little bit of a respite from the rain we've had for, going on like 2 weeks now. So I saw some headlines on social media yesterday that they had like inflatables out in Denver because parts of Denver were flooding. It reminded me of Houston, but I mean, it's not funny if your car gets stuck in the water, but to have little rafts and stuff and rowing across the streets, it's kind of you don't see that a lot out here because everything is on a hillside and runs down towards Kansas. So, anyways, I hope you're having a fantastic day. If it's your first time watching Liberty Call, I'm glad you're here. And let's go ahead and give me some thumbs up. Press those thumbs up buttons, likes, shares, subscribes, follows, press all that stuff down there. I greatly appreciate it. And let's go ahead and jump into the numbers for today. It was kind of a meh day in the market, just kind of back forth around the midpoints for most of these major indexes. The Dow finished barely up 0.03% or 10 points, closed at 33,573. The S&P 500 was up 0.21%, closed at 4282. NASDAQ was up 0.36%, closed at 13,276. The VIX fell 5.23% today. It's down to 1396. Canada was up 0.62%. Brazil was up 1.62%. Mexico up 1.75%. There's a deer walking across or past my door. Over in Europe, let's see here. Where was I? Germany was up 0.18%. UK was up 0.37%. France was up 0.11%. The Netherlands was down 0.15%. Spain up 0.23%. Italy up 0.67%. Switzerland up 0.47%. And Portugal up 0.76%. Both Russian exchanges were in the red today. The MOEX down 0.48%. The RTSI down 0.97%. Overnights in Asia, starting with the Nikkei in Japan, it was up 0.9%. Australia was down 1.2%. New Zealand up 0.34%. In China, the Shanghai was down 1.15%. The Shenzhen Component down 1.58%. China A50 down 0.26%. DJ Shanghai down 1.19%. The Hang Seng flat at down 0.05%. And the Taiwan weighted was up 0.28% for the day. All righty. It's like I said, kind of a, I don't know if it's the bulls and the bears or, tug of war back and forth and, trying to get some direction for the market. Again, we actually have one of the third article we're going to cover talks about, how everyone seems to think everything is fine. But when you start to peel back the onion, it doesn't look nearly as good. And I know I've talked about this quite a lot over the last couple of months. All right, let's go ahead and jump into the market recap for today. S&P 500 struggles for direction as regional banks rebound, but healthcare weighs. On Tuesday, the S&P 500 experienced fluctuations between gains and losses as investors assessed the slip in healthcare stocks and renewed interest in regional banking stocks. Financials emerged as the top performing sector, with regional banks like U.S. Bancorp, Zions, and East West Bancorp leading the way as investors sought opportunities in the sector's recent weakness. Tech stocks received a boost from Microsoft and Alphabet, but Apple continued to trade in the red following the unveiling of its Vision Pro headsets. The higher than expected price of $34.99 for the headset could limit adoption and have minimal impact on revenue in the near term, according to UBS. The estimate suggests that the headset's contribution to total revenue over the next 12 to 18 months would likely be no more than 1% to 2%. Healthcare stocks face pressure driven by a slump in Elevance Health and Merck and Illumina. Illumina in particular experienced a decline of over 4% as it continues to battle with regulators to salvage its $7 billion acquisition of cancer group startup Grail. Illumina filed an appeal with the FTC order that demanded the unwinding of the acquisition. Boeing, a significant component of the Dow, exerted downward pressure on the market with a 2% decline. The aircraft manufacturer announced a delay in the delivery of its 737 Dreamliner jets due to a production flaw. In the realm of cryptocurrencies, regulatory concerns heightened as the U.S. Securities and Exchange Commission filed a lawsuit against Coinbase Global, accusing the cryptocurrency platform of violating U.S. regulations. Coinbase shares dropped over 12% in response. This action by the SEC followed a lawsuit against Binance, alleging multiple security violations and misappropriation of customer funds. Despite the regulatory worries, cryptocurrencies like Bitcoin, Ethereum, and XRP managed to avoid significant downward pressure and led the broader crypto market higher. All right, so that's what's going on in the market today. Let's dive a little bit deeper on the debt deal that was passed last week. U.S. public sees no clear winner in debt ceiling deal. Let's see what that has to say. According to a recent Reuters Ipsos poll, neither Democrats nor Republicans emerged as clear winners in the battle to raise the $31.4 trillion debt ceiling. The survey conducted after Congress passed the bipartisan deal to raise the borrowing limit didn't raise the borrowing limit. They just suspended the borrowing limit. Revealed that 50% of Americans believe that neither party came out on top while 20% thought both sides had won. Among respondents, 20% believe Democrats had the better side of the deal, while 11% thought Republicans had performed better. The poll had also indicated that self-identified Democrats were more satisfied with the outcome, with 80% approving of how President Joe Biden handled their side of the negotiation. What's this theirs and ours? I mean, aren't we all Americans? I mean, seriously, continuing to run up the debt is not very American, in my opinion. On the other hand, 44% of Republicans approved of U.S. House Speaker Kevin McCarthy's role in driving the bargain for Republicans, while 42% disapproved. McCarthy's low approval ratings highlights the division within the Republican Party, as hardline Republicans who sought deeper spending cuts have expressed dissatisfaction and raised concerns about McCarthy's position. Well, I'm neither a Democrat nor a Republican. I'd like to see the entire republic collapsed. I mean, if Putin wants to drop a nuke on Washington, D.C., I'm not going to exactly shed a tear. Most of those people who live there are crooks and thieves anyways. The deal to suspend the debt ceiling was reached between Biden and McCarthy after weeks of negotiation between the White House and Republicans who hold the majority in the House of Representatives. Biden signed the deal into law to prevent a financial disaster. Again, there was not going to be a financial disaster that would have occurred if the U.S. government had been unable to meet its financial obligations. Both Republicans and Democrats have presented the deal as a victory, with Republicans highlighting a reduction in non-military spending. Biden emphasized that the compromises in the deal demonstrated the possibility of bridging political divides in a polarized nation. Yeah, unless you're going to deport all the woke people to California and put up a fence along Nevada, I don't think that anything's going to get fixed. Critics of both sides have left from both the right and the left have voiced their concerns about the deal. Some conservatives argued that the spending cuts did not go far enough, while progressives criticized the increased work requirement. Oh, yeah, it's tough. It's terrible that you make lazy people work for free money. Work requirements for Americans receiving assistance and provisions that streamlined approvals for fossil fuel projects amid the climate change crisis. Again, it's like COVID. Everything is complete made-up BS. The poll surveyed 1,004 U.S. adults nationwide and had a credibility interval of about 4% in either direction. So, yeah, no one thought they got a good deal. I mean, unless you're a moron in Washington. Next up, this comes from the Mises Institute. It's titled Yet Another Month of Questionable Federal Jobs Data, as 310,000 fewer people report having jobs. The Bureau of Labor Statistics released new jobs data in May, showing a seasonally adjusted increase of 339,000 non-farm jobs, surpassing expectations. However, despite the positive employment figures, several other economic indicators point to an economic slowdown. The Philadelphia Fed's Manufacturing Index and the Empire State Manufacturing Survey are both in recessionary territory, while the Leading Indicators Index continues to worsen. The yield curve suggests a recession, and even Federal Reserve staffers predict a recession this year. Additionally, individual bankruptcy filings rose by 23% in May, and temporary jobs decreased year over year, which often indicates an approaching recession. The discrepancy between positive jobs reports and other economic indicators can be attributed to the different methodologies used. The headlines have mainly focused on the Establishment Survey, which measures the number of positions from employer surveys. In contrast, the Household Survey, which surveys individuals, has not shown the same level of job growth as the Establishment Survey over the past 2 years. Specifically, there have been a significant gap of 2.2 million people between the two surveys since 2022. In May, while the Establishment Survey reported a gain of 339,000 jobs, the Household Survey showed a loss of 310,000 employed persons, creating a gap of over 600,000. This growing gap may be due in part to the declining number of responses to the establishment survey, suggesting a decline in reliability as an indicator of the overall economy. Additionally, the establishment survey does not track self-employed workers, which have played a significant role in employment trends in recent years. Furthermore, the total number of payroll jobs, according to the establishment survey, is up by 3.7 million since March of 2020, while the household survey shows an increase of only 1.9 million employed persons over the same period, resulting in a gap of 1.7 million. The discrepancy between the two employment reports has led economists to question the media's positive jobs narrative. Some economists suggest that the data indicate stronger economic growth than what other monthly data suggests, while others point out negative aspects such as the drop in household survey measure of employment, the rise in the unemployment rate, and the decrease in the average weekly hours worked. The contradictory data can also be attributed to the heterogeneity of jobs and the varied effects of monetary inflation across different industries and regions. The current trend of decelerating monetary growth is likely to have different effects throughout the economy, and the establishment survey may not capture these trends accurately in real time. All right, so believe what you get. It's kind of garbage in, garbage out. I mean, I think a lot of this data, because it is calculated in different ways, people kind of cherry pick. Oh, this one looks good. Oh, that one looks good. And here I'm going to put together my report and see, everything's fine. Granted, everything's falling apart, but hey, everything's fine. Everything's fine. All right, last up. My boy Jake back there is scratching. How much is a decent retirement home going to cost me? Something that as you get older, you probably need to start thinking about. A retirement home is a private facility that offers care and support to seniors, providing various services, amenities, and costs. These homes cater to the needs of seniors and typically offer accommodations ranging from rooms to large apartments. Services such as housekeeping, maintenance, and dining are commonly provided, either in communal settings or in residence rooms. On-site medical staff are available for medical care, including medication assistance and monitoring of medical conditions. Social activities, transportation services, and events are often organized to promote residents' happiness and community engagement. The cost of a retirement home can vary widely depending upon factors such as the type of facility, independent living, assisted living, or nursing home, payment models, or rental-based or ownership-based, location, level of care, and available amenities. According to Genworth's 2021 Cost of Care Survey, the national median costs for assisted living care living are $4,500 per month or $54,000 per year, while semi-private or private nursing home rooms cost $7,908 a month or $94,900 a year, and $9,034 a month or $100,405 per year, respectively. Location plays a significant role in the cost of differences, with prices varying based on state and amenities. When choosing a retirement home, it is essential to consider the individual needs and preferences. Factors such as specialized care requirements or specific accessibility features may narrow down the options. Setting a budget is crucial, considering upfront costs, monthly fees, and additional charges for services and amenities. Location, proximity to family, friends, and medical facilities, as well as safety and accessibility, should also be taken into account. It is vital to ask questions about the services and amenities offered, staff qualifications, and availability of medical care before making a final decision. Considering all these aspects and seeking financial assistance, if necessary, can help individuals make an informed decision about their retirement home that best suits their needs. I'm probably going to die in this chair. So, there'll be one day I'll be like, I'll just be sitting here dead one day. So probably in about 40 years, be my best guess, maybe 30. Anyways, all right. Well, hope everyone has, that's everything I had for today. Hope everyone has a wonderful evening. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information's there. I hope you have a wonderful evening, and I'll talk to you next time. Adios.